I have a question for you. In The Big Short, like, what's one story you wish would have been included, and what's one thing that maybe they didn't get exactly right that you kind of want to tell the history of today?
Let's see. I'm sorry. Ask the first question again.
What's one thing they may have left out that you wish would have been included? Maybe in
Oh,
your analysis of trades or
there's
how
a
you
good
attend
story.
market.
I'll tell you a story that I thought was a good story, but it wasn't in the movie. It was sort of in the movie, but they did it differently. I wish they had done it exactly as it happened. So on Lehman um, went bankrupt Sunday. I think it was September 14th. And then on Tuesday, AIG collapsed. And on Friday, I was at a conference um, meeting potential investors. And basically, the world was imploding. I mean, literally, bonds weren't trading. My trader and partner, Danny Moses, was having an anxiety attack. And I got a call from my partners to say, Danny's having an anxiety attack. We're getting out of here. And I told him, go to St. Patrick's Cathedral. We'll sit on the steps. So I turned to the investors who I was in front of. I said, listen, there's too much crap going on in this world. I got to go. And I left. And we were sitting on the steps of St. Patrick's. It was a gorgeous day. And I think I turned to one of my partners and I said, these poor people, they have absolutely no idea the calamity that's about to unfold on top of their heads. So I wish that had been in the movie, but it wasn't in the movie. And which part did they get wrong was your question?
Yes.
The movie pretty much got it all right. I mean,
Okay.
I was kind of that crazy back then, and that angry, and I thought that was captured really well. And he simplified certain things because they had to be simplified, but I think the movie really captured that period of my life pretty accurately.
Talking about The Big Short, during that time frame, was it a one aha moment where everything came together for you, where you was like, this thing is about to fall apart, or did it happen over the course of time?
Combination of both. So, we were short subprime paper, which is all these securities, loans that are securitized, subprime loans. And there's a database. Basically, every single subprime or every single securitization does a data dump every month. It comes out of kind of like over a 2-day period during the middle of the month, where every securitization will report every single credit statistic, 30-day, 60-day, 90-day delinquencies, real estate owned, losses, you name it. Whatever possible credit statistic there is, you got it reported. It's the most granular consumer loan data in the world. And that was like the Bible. And every month we would we would be very religious and we would read our Bible. And so every month the data kept getting a lot worse, except for a very short period of time in the spring of 07 because people got tax refunds. But other than that, the data just kept getting worse and worse and worse until it was very clear that this is not good. And then I guess the moment when I knew it was like, okay, this is it in terms of the subprime mortgage part was it was August of 07 and my family and I were vacationing on the island of Nantucket. And we usually go there for 2 weeks. We rent a little house. And in the second week, the mortgage market was imploding in that time. And I remember one day in the second week, we were walking and my wife turns to me and she says, Stephen, where are all the men? And I said, oh, they went back to New York to watch The End. That's when I knew it was over. But by the way, the one thing that's never usually said, the financial crisis, as far as I was concerned, was baked by August 2007. Now, the crisis itself actually took place in the fall of 2008. But by then, there was nothing any of these companies, anything Wall Street could have done to stop it. Because they owned all this stuff.
Yeah.
As you're talking, it feels like there's optimism. Obviously, what's going on with tariffs is causing uncertainty in the market now. But at some point, when there's some certainty around it or some clarity or deals are made, the outlook for the economy, including the housing market, right? Because we've seen potential credit card debt getting higher. We already know what our national debt is. What are your outlook for the economy in the next year or so?
I mean, look, if there was no tariff thing, I'd be very bullish. Credit quality, the banks will just reported credit quality was fine.
Yeah.
It was very stable. People like to point out to the increase in credit card debt. It's just an absolute number. That to me, that's not important. The thing to watch are the actual credit statistics. And as long as delinquencies they're low, they're flattish, I don't find there's any cause for concern. If a problem started to emerge, you will see it in that data.
What is the percentage of delinquency that it would raise alarm for you?
Good question.
That's a good question. I mean, it's not an absolute level. I would have to see a pretty steady increase month to month. That's when you start to see it. What are we? We're in April, so if May is worse than April and June is worse than May, this is what happened in 2007. Every month it just got worse.
Yeah.
Then there's a problem. If it's just seasonal stuff and it's just bouncing around, it's nothing to worry about.
30-year treasuries haven't made a new high since 2020. What the hell is going on with that bond market? I've asked every investor and trader that I know. I don't want to be an alarmist, but do you think we'll have a turnaround at some point? And why do you think we haven't hit a high in almost 5 years?
Look, I think there's short-term trading and there's long-term trading. I think right now you're dealing with very short-term stuff where people are just de-risking, and so they're selling. They're probably, on the stock side, people are selling some stocks, and on the bond side, they're selling long-term treasuries, and they're probably maybe they're buying short-term treasuries or something else. Tomorrow, if they announce some sort of deal, it would all reverse. Do I think there's a problem? Do I think China is going to sell all of its long-term treasuries? I mean, they could. Where would they put their money?
Yeah.
That's sort of the problem. If you're big money, the Chinese government, the Norwegian sovereign wealth
fund,
some enormous pension fund, and you need to you can only invest so much money in stocks when you're that big because it's not liquid enough.
Yeah.
You need to buy bonds. That's where big money parks its money. And if you're going to buy anything of duration, you're going to buy treasuries until there's an alternative. So what's happened to our treasuries of late, I think, is short-term de-risking that people are doing.
Okay.
Well, Steve, thank you for your time. Great conversation. And
absolutely.
Your podcast is out now, right?
Yes, it's called the EISMAN Playbook. A new one just dropped today discussing why the German economy doesn't grow anymore.
That's a good one. Okay.
Yeah, them automotives.
It's based on it's an interview with a guy who wrote a book, the title of which is Kaput. One of the best titles I ever heard. I got to get this guy on my show because anybody who comes with such a gutsy title deserves to be interviewed.
For sure.
Fair warning.
Well, thank you. Thank you again. Appreciate your time.
Thank you.
Thank you so much. I appreciate you.
There you have it, ladies and gentlemen.
Amazing conversation with the legend, icon.
That's a legend, man.
Yes.
Learned a lot, man.
For sure.
I think the most important thing I took from it was his level of optimism. He's called doomsday before, and he doesn't see a forecast of it in the near future. So
yeah,
that was good news.
Cautiously optimistic.
Yeah.
Cautiously optimistic. Because even if you listen to what he said about China, he's like, everybody's gonna work their deals out, and then the U.S. and China is gonna be at it
for
a long time.
That's not encouraging.
Yeah, but that GDP, and we spoke about it the first day about the importance of the GDP and our level. That little tidbit he threw in, and it says 19, but they ship things off to other countries.
It's the nuance in the numbers. I know people say
Yeah.
men lie, numbers don't. There's some lying in
The
numbers
numbers is
for sure.
I hadn't even thought of it like that, but that makes sense. That makes a lot of sense. And I wonder how many other countries they're actually using to offset some of those tariffs. That would be interesting to find out. Not that we would, but it would be interesting.
Yeah.
So
And then-
he's okay.
no, go ahead, Rashad.
No, go ahead.
No, go ahead, brother.
Well, I was going to talk about NVIDIA. I'll switch topics. So if you want to follow up with what he said.
Oh, okay. I think for everyone who's in love with the lore of the Big Short, that being hyper bullish is the new Big Short trade. I think he expressed that well tonight. Whether it's, well, I mean, he's not pro Bitcoin, but if you are in the Bitcoin community, you think that has value, stay long that. If you think tech is going to work out, to stay bullish on that. I think the desire to catch the top of a market and all those factors that led to the world almost falling apart, they're not here now, despite how bad the tariff situation may be. So I would be remiss if I didn't bring that up, because everyone wants to recreate that. Even with Michael Burry, like, his return was 500%. Not knocking that, because that's an amazing return, especially for that time. But it's a lot easier to get 500% of your portfolio to the upside holding for a 3 or 4 year period if you layer your investments and trades right.
Yeah. And you finally got an answer on your bond market.
Finally, I want the off the cuff at the bar answer though. I need the 08 answer when he was in the conference. Yeah. So